Hey everybody, Sammy again. I just recorded a video. This is my second video of the day. I want to say welcome again. I hope you're doing well. I wanted to give you a market update. We've had a very strong market the last several months, and here's what I learned from being a professional, successful trader, is that you don't bet on the market going down. You don't go against the trend for no reason. Okay, so here you didn't hear me come out and say the market is topped out, or here, or any other time. But now we got the acceleration bar, the wide range bar, and we got pretty close to the prior top. So I think the market, and then the wide range bar topped out. But the truth is, I was telling room members, if you are in, if you actively manage your 401k like I do, then you or long-term plays, then you might want to consider getting out, because we've had the 3-month rally, exactly 3 months actually, and we finally got the wide range bar. If you look at the weekly chart, of the QQQ was very close to the prior top, also very extended, likely the top. Now, why did the market put in the wide range bar? Who cares? I know why. Because, the Fed signaled there won't be any more rate increases there won't be any rate increases in 2019. It doesn't matter. What it means is, if you really understand trading, what it means is finally the last batch of buyers committed. They finally bought the market. They went long. They thought, okay, this is it. We're higher from here, regardless of the news. And guess what? The next day it got reversed. Why? Because we ran out of demand. That's basically it. We ran out of demand. After this 3-month rally, finally the novice traders committed, and that's the top. Now, when I say that's the top, it should be the top for a while. I don't mean we're going to crash from here. Maybe we will. Maybe we will. But as I said in every single video that I do on the weekends, every single video ever going back way back to the beginning of the year, I think we are going to be in a sideways trend for a while but I don't think we're going to crash, unfortunately, because I love bearish markets. I don't wish the country any ill will. I want the economy, I want the country to do well, but I like bearish markets. But this rally that we got, this is a weekly chart of the QQQ. You can look at the SPY, it's just a little weaker, the SPY, but the same stuff. IWM led on the way down, so it's the weakest of the bunch. And the diamonds, I don't even, DJA, I think, DJI, whatever, I don't even look at it. See, I don't even know the ETF, DIA is the ETF. I don't even look at the Dow Jones, because it only represents 30 companies. So it's not really representative of the entire economy like the SPY or the QQQ, which is dominated by the NASDAQ stocks, right? The technology stocks. At any rate, we had a terrific rally, really bullish rally, that if we were going to be bearish, we wouldn't have rallied as much. Okay, we would have actually stayed probably right here, and then from there dropped. This is the 20-period moving average. This is the 200. That's all I use. Okay, on intraday charts, I do use the 8-period moving average, but that's about it. So this was a very strong rally, and that's why I don't think we're gonna crash. We might just go sideways for a while, drop a little bit, and then eventually perhaps go all the way back up and make new highs. That's what I think is going to happen. But for the time being, this was the top. And if you're part of the strategic day trader room, then you knew to exit yesterday. Now, I don't just talk the talk like most other people do. They just talk really tough and they act like they know what they're talking about. But I actually, I probably shouldn't be showing you my email, but I just want to show you that I got out of my 401k. I just basically, in my 401k, all I do is I go long the SPY. That's all I do. Okay. And so I haven't even read this is the confirmation, May 21st. Okay. That's when I got it. That's when I submitted it to go out. And that's basically saying we're emailing to confirm a change has been successfully made to your paychecks. So I got out of the market on the 21st. See this? That's March 21st. The top. That's when I got out of the market. And then when did I get in? Okay, Paychex. Let's see. I'm showing you my email. Okay, when did I get in? Long the market? December 28th. A little bit late, like 2-3 days after the bottom. And that's just the confirmation. See this confirmation. So I got in on the 28th, which was this day, I believe. That's the day that I got in the market long. Now, why didn't I get in this day or that day? Because the problem, and this is a problem that I have with my 401k, is when I submit a change, it executes the trade at the end of the day. So it's very, very hard for me to want to get in long after a huge move already. And the next day we also had another huge move. So that's the issue is, so I waited a couple days here, but that's pretty good. I don't need to capture 100%. Even if I got in this day, I would have gotten filled up here, right? At the end of the day. If I submitted the order to go along the market this day, I would have gotten filled at the end of the day here. I actually got filled the same exact price, basically, on the 20th. Check it out. So I got in on the 28th. This is also, shared with Strategic Day Trader Room members. And check it out. Got in, showed you confirmations, my confirmations from Paychex, which is the payroll processing firm, and got out on this day. That's pretty good. That's capturing, I would say, 90% of the gains, pretty much. The best day to have gotten in the market would have been on the 23rd, that day. But that's pretty good. And now I'm out. And now I'll sit on hands for a while until I think the market is ready to go back up. The truth is, I don't think the market is going to crash. So if somebody wants to, if you missed the top a couple of days ago, if you're in the room with me, you wouldn't have missed the top, okay? Because that was discussed in detail in the room, that this is the wide range bar, very close to the top. I said the risk of a downside move compared to the potential, the reward of an upside potential is very, very limited. We were at, look, we closed at 182.80, okay, 83. The all-time highs was 186 or 187. All-time highs was 187.50, 187.53, all-time highs. So there wasn't much upside anymore. So that was the perfect day to get out. Perfect day to get out. Okay, but what I was gonna say is, I also said if you don't actively manage your retirement or long-term accounts, then it's no problem. You want to stay in it. I would, in my opinion, I don't think we're gonna crash. So it would only be a matter of time before we go back up. So it's not a problem. But if you know your stuff really well, or if you're in the strategic day trader room with me, then you're gonna get in at the bottom, or almost in this case, and at the top. I told you, it executes the trade at the end of the day. So getting out at the top was great. I mean, it was great that it executed at the end of the day. My Paychex executed at the end. Great. Here, not so great because I couldn't get in at the exact bottom or something like this. But that's pretty good. That's capturing 90%. Notice how I also showed you confirmations of my Paychex, my 401k basically, entries and exits. So if somebody says, "Oh, I got out this day," ask them for confirmations. They probably won't have anything proof. At any rate, I want to also tell you that we have what do we have? I have an incredible offer for you that T3 has put together, where you can trade with me for 30 days for $49. I mean, if that's not free, it's as close to free as it gets. Trade with me for 30 days for $49. I dropped a link to this special offer in the description, so be sure to check it out. And if you have any questions, reach out to T3. Okay, the info is at the bottom. Thanks so much, everybody. I hope you have a great rest of the weekend, and I will talk to you soon. Good trading.